Now, banking is the core of the economy. So we are absolutely thrilled to have with us senior bankers. Mr. Georgios Papadimitriou of EY is going to moderate the session. And before that, he will call our chairman and former minister of finance.
Ladies and gentlemen, good afternoon to everybody. Thank you for joining the banking panel. And as Nico said, I think this is one of the most interesting discussions during the forum. This is probably the reason why Nikos and Olga have decided to place it exactly after the lunch break. Over the past several years, Greek banks have come through an extraordinary journey, from economic crisis and consolidation to capital restoration, digital transformation, and sustainable growth. Today, the sector stands in a much stronger footing with solid balance sheet, improved asset quality, and growing investor confidence. I think there is few people that would be better than Mr. George Zanias to discuss about this path, as he has lived it through different and many roles. As Nico said, he has been former Minister of Economy. He is the chairman of the board of directors of Eurobank, and since last month, he has also been elected as the chairman of Hellenic Bank Association. So, Mr. Zanias, the floor to you for the introductory remarks to our panel.
Thank you very much. Hello to everybody. In fact, it has been more than 10, maybe 11 years since the last time I addressed this audience as the chairman of the Banking Association. Now it's the second time I'm becoming a chairman of the Banking Association. Believe me, things are very different now compared to that time, maybe 2014, I was standing in front of you here. At that time, we had a major crisis, uncertainty, no markets, closed, recession. NPLs were approaching 50% of the total loans. Deposits were down by almost 50% in the Greek banks. With successive recapitalizations, we were trying to keep the Greek banks alive. 3 of them in total took place. In fact, in 2014, the last time I spoke here, we had very successful recapitalization solely with private funds only. They were all lost afterwards. It's a pity, really. Now, today is a completely different story. And I'm going to give you some numbers that really come from the heart of the regulator, the SSM, the European Central Bank. If we start, for example, with profitability, according to SSM, the net interest margin in the European banks is 1.5 units. In Greece, 2.8. I just gave you a revenue side. From the cost side, the cost to income in Greece is 36%. In Europe, 54%. As a result of this, and some other factors, of course, there is a lot of profitability in Greece and return to equity. Of course, those who invested after 2004 and 2015, actually, are now being rewarded. So the return to equity in Greece is 13.2. In Europe, 10. Greek banks now, after all these recapitalizations, now they produce a lot of profits to have adequate levels of capital. CET1 in the Greek banks is 16.1%, exactly the same with the SSM banks. Well, a little better in total capital adequacy, more than 20%. These numbers, of course, are extraordinary compared to what was in the past, even before the crisis in Europe. 8-9% was at that time. In terms of liquidity, I'll give you two numbers. Loans to deposit in Greece, 62%. Loans to deposit in Europe, 102%. Liquidity, the LCR, in Greece, 209, in Europe, 158. And finally, about some risk factors, NPLs in Greece down from 45% to about 3% now, in Europe 2.2%. I have to add that the 3% is the lowest we have in Greece since we entered the Eurozone 25 years ago. And of course, in the stress tests performed by organized by the European authorities, the Greek banks stressed rank very, very high among the European peers. There are some qualitative characteristics also which are different. Greek banks were privatized. The Greek banks are now paying dividend after 15 years of abstaining from that. In fact, 2 or 3 years ago started. The Greek banks now have an excellent governance structure. In fact, the SSM, who is supervising heavily the Greek banks, really gave priority to governance. Even my bank, where we have about, the majority, of course, are independents from 7 different jurisdictions. We have truly independent. Of course, there are other things that are helping. Now the country has the investment grade, and it's investing considerably in technology, and it is supervised now, the Greek banks, by a supranational authority. This is very important also. So these are the qualitative characteristics. Now, the combination of all these, of course, led to the Greek banks really restoring their role of financing the economy. Now, credit expansion runs at double-digit percentage change. Double-digit this year, last year, finally, what are the prospects ahead? I will say 2 or 3 things that point towards a positive future. One of them is, you heard the minister saying about that, is the growth outlook for the country. And for the next few years, we are going to grow faster than the Eurozone. We have already done it for some time now. Another thing is that, the household borrowing in Greece is only now started picking up. So far, it's mainly the businesses. Don't forget, we still have, because we had a very deep crisis, still a large non-bankable sector which gradually moves into being bankable. I think there are other opportunities also, but these are structures that point towards a much better future, even compared to the excellent one that currently the banks have. Really, I'm very glad that I'm speaking here today, because the last time I spoke here, the situation was extremely different. And I'm very happy, really, and blessed probably, to be in the same position after all these years and come to tell you a completely different story. Thank you.
Thanks to Mr. George Zanias. And let's turn now to our panelists, all of them leading banking executives from 4 of the Greek banks, individuals who have played a key role in the success of their organizations over the last years. So in alphabetical order, we have with us today Mr. Christos Christodoulou, General Manager and Group CFO of National Bank of Greece, on the left. We have Mr. Lazaros Papagaryfallou, Deputy CEO of Alpha Bank Group, on my side. Mrs. Valerie Skoubas, CFO of CrediaBank, the only lady in our panel, and Mr. Konstantinos Vassiliou, Deputy CEO executive member of the board of Eurobank and head of CIB Corporate Investment Banking. So the conference theme this year is From Strength to Growth, and I think this title reflects both the recent achievements of Greek banks, on which Mr. Zanias just discussed, but also the next steps and ambitions of Greek banks towards sustainable expansion and growth. And the next chapter is about how Greek banks can power economic Greek growth, how they can sustain their leading performance, embrace innovation, support building an economy that is fit for competition at a global scale. So today's discussion will not be just about profitability and balance sheet. We will have themes around expansion beyond Greek borders, about priorities in this macro environment, about attracting foreign investment, but also about things like the role of technology in modern banking. So let's start with the lady in our panel first, Valerie, with you. And the discussion is, where do you see opportunities in this concentrated banking system with 4 systemic banks for a non-systemic bank like CrediaBank?
Well, we see 2025 was a year of a restart for CrediaBank. So after a period of substantial reorganization, CrediaBank aspires to become a flexible, modern institution defined by continuous innovation combined with a human approach. Our vision for the coming years is clear: to become the best bank for everyone. It's small enough to remain agile and large enough to meet the needs of the customers. Where we do see opportunity is, as we're smaller, to be agile, to continue and change the status quo, returning to what truly matters. What does this mean? The relationship of trust with the customer. Open doors without any appointments, with extended cashier hours, with our people available, both in person and remotely, with products designed to empower and with solutions and services that create a new service experience. This approach will really make a difference in the sector that continuously and constantly faces challenges, whether they're geopolitical, market volatility, continuous technological transformations we're aware of, and rising customer expectations. Yet within these challenges lie the opportunities. CrediaBank has chosen to invest in adaptability and evolution, 2 factors that determine who will stay standing in an environment that is constantly changing. We are a bank that stands by its customers, that's constantly changing, and responding with flexibility immediately, overcoming any bureaucratic rigidities that a large bank may face. CrediaBank is committed to being part of banking's positive transformation, empowering the economy, supporting the society, and shaping the future of banking with a purpose. That's why we are the 5th pillar bank right now. We've differentiated ourselves from being smaller, quicker, and agile.
Thank you, Valerie. And Lazaros, turning to you, over the last years there has been a number of non-organic initiatives in Greek banks and also in Alpha Bank, things like Axia, Astrobank, FlexFin, and a couple more. So my question is, what is your thinking around inorganic growth, and what, if you will, is the macro story that supports these moves over the last years?
Good afternoon to everyone. Indeed, George, since the beginning of this year, we have reallocated capital out of Romania, where we have divested, retaining a minority stake there, partnering with UniCredit in this market, and having reallocated capital to Greece and Cyprus, which are the core markets of our operations. This has happened in a disciplined manner through earnings per share accretive transactions, which have a perfect strategic fit and complementarity with what we're doing. In this sense, we have acquired a digital factoring operation that is merging with our factoring business in Greece. We are completing the acquisition of a regional investment banking leader in the market, Axia, that will merge with our brokerage operations in Greece. And we have also acquired a bank in Cyprus, doubling our market share in deposits and consolidating our presence in this market. These transactions are accretive. Earnings per share grows by 6%, and we have spent 70 basis points of capital to get an uplift in our return on equity of 1%. So what is the strategic outlook and fit of these projects. First, when it comes to Greece, we have focused on strengthening our product factories in order to grow fee income and diversify our top line. That makes us more resilient as time goes by through the cycle. In Cyprus, this is about getting critical mass and growing our franchise in a market which is core. So in-market consolidation, that is one play, and strengthening of product factories, that is the other play. A softer element of these acquisitions that we must not downplay is that we bring talent on board. We give leadership roles to those management teams, and we refresh the organization, creating catalysts of change. And all that happens in a positive macro backdrop that sees an investment-driven recovery for Greece. Thus, we need to better position ourselves for the opportunities that lie ahead.
Thank you. Thank you very much, Lazaros. And Costa, if we stay a bit on this inorganic growth, you have as well as Eurobank very recently completed the acquisition of Hellenic back in Cyprus, expanding in this way your international footprint outside Greece. So the question is, following this acquisition, which are the strategic steps that will define the bank's next phase of expansion? And if you will, a bit about primary priorities and targets for growth for the years ahead.
Thank you for the question, first of all. First of all, I was listening our chairman, Mr. Zanias, and he had some really factual numbers, and this is the basis that actually gives us the opportunity as also to Alpha Bank and also National Bank of Greece to expand abroad. First of all, I have a recommendation for the chairman under his capacity as chairman of Hellenic Association to make everybody's as a Christmas present an evil eye. With all these good numbers we heard today, we need to make sure that we'll keep the same pace. Look, I mean, we discussed in the past, but Eurobank, from its initiation, as its name prevails, we always wanted to be a Greek origin bank, but with a European presence. And this was a very focused strategy, and that's why we made acquisitions, and we are the primary Greek bank with international presence. Besides the recent acquisition in Cyprus, that actually we're the largest financial institution now in Cyprus. And when we call ourselves the largest financial services institution, it's not only about banking. In Cyprus, we have now 42% market share, but also we acquired the largest insurance company there, CNP. So on the insurance services, we have a 30% market share. Also, we own the fourth largest bank in Bulgaria and a private bank in Luxembourg with a branch in London. Lately, we're following a little bit the EuroLeague pace, which besides Europe, they're expanding towards Israel and Dubai. BC is a new basketball team. So actually, we're redefining a little bit our Eurobank and European vision, and we're trying to expand in areas that we see tremendous growth, and areas that actually they are evolving as some of the largest business and financial centers, not for the region, but for the world. So our strategy is redefined, where is 4 hours radius by plane, and where actually there is a strong G2G relationship with our country, and where we see opportunities for our clients, the existing clients, but also potential future clients of the bank. So we just opened a rep office in Mumbai, in India, because we'd like to promote both Cyprus and Greece as part of the IMEC initiative. We already submitted an application to open a rep office in ADGM in Abu Dhabi, and we're starting the process for a rep office in KSA in Riyadh. And part of our plan was to open a rep office in Israel. Due to the war there, this would change the timing, but we're beginning now again. The strategy is very simple. We want to grow internationally. Not only banks, but whoever wants to compete today needs scale. This is very important, needs extroversion, and needs self-confidence. So we'd like to increase the scale of the bank, of course, with certain steps towards two directions. One is geographical, and the other one is through vertical businesses, so insurance and asset management. This is the strategy.
Thank you very much, Costa. And Christos, turning to you, in this economic environment, NBG has shown really good profitability despite the declining interest rate challenge on which we had discussed as well last year. But investors, are interested in the future, not the past delivery. So the question is, if you believe that this level of profitability are sustainable, and what are the levers, if you will, that you will pull to maintain these levels of performance looking ahead?
Yes, indeed. Not just NBG, but I think all Greek banks demonstrated remarkable resilience to lowering benchmark rates in 2025. Let me remind everybody that we experienced more than 200 basis points of decline since the peak of the rates. And this is leveraging on the back of the Greek economy. The Greek economy has been a powerhouse for us to deliver on the results in 2025, and it will be the powerhouse for us delivering also going forward. So let me mention a few points. Solid growth continues, and the adaptability in an uncertain external environment is very important. The financial position of households and corporates is doing very well, and this is supported by robust labor market conditions as well as the strong balance sheets of the businesses. Financial conditions are favorable with the credit flows increasing as the chair of the Hellenic Association mentioned, especially corporates in the double-digit growth, and the risk premia of corporates are also improving on the back of the rating upgrades of the sovereign credit of Greece as well. Substantial capital expenditure from the RRF, rising private investment, supporting fiscal and monetary policies are also going to provide support going forward as well, and could cushion any downside risks that might come our way from external shocks. Now, we at NBG, we leveraged on all this, and that's the result of us delivering a strong profitability in the 9 months of the year, and not only meeting our targets for the year, but we also revised several key potential indicators based on this solid performance for the 9 months. Indicatively, we managed to deliver about €1 billion profits in the 9 months, and our returns on tangible equity were around 16%, over 16% actually, despite the excess capital that we enjoy at the moment. This performance clearly demonstrates the resilience of our top line, which absorbed the bulk of the interest rate normalization up until the second quarter and the third quarter of the year. This was supported by credit growth, our hedging strategy, and the sustained momentum that we recognize in fee income. And these effectively are going to be the levers of growth for us also in the future, obviously leveraging again the dynamics of the macro conditioning in Greece and the credit expansion. In our core income growth, NII will benefit from the expansion mostly in the corporate loans in multi-sectors, but we have to note here that unlike the past, we see a more supportive retail segment to the overall growth in lending, mostly coming from mortgages. Everybody knows that while everybody is promoting mortgage demand, there is a lack of supply in housing. We hope that this is going to strengthen in the future and will see us granting much more mortgages than we do at the moment. And through mortgages, cross-selling in other products of the retail segment will also grow stronger. The other one is we need to retain our cost discipline, despite the fact that we are making more profits than we used to make in the past. And we need to keep a competitive cost-to-income ratio, especially compared to other European banks. And of course, given the benign asset quality trends that we see in Greece, and the improvement of the asset quality profile of our balance sheet, cost of risk normalization will also be something that will support our returns going forward. So we are pretty confident that leveraging on the franchise of MBG, recognizing our comparable advantages, and at the same time capitalizing on the investments that we've done in technology, we'll be able to continue sustainably to deliver higher returns than we ever deliver at the moment.
Thank you, Christo. And I will take this pass, Costa, of Christos discussing about credit growth as one of the levers for sustaining performance in the future. So my question to you, given your corporate as well investment banking background, is which are the specific sectors in which you see growth prospects in this economic environment, and which are some of the projects that you think would be central to the bank's investment and financing strategy for the next year?
Thank you, George. First of all, credit growth was keep remaining very, very strong. I think that all the banks on the corporate side, most probably this year will register a net credit growth of above 15%, which is significant. And now going forward, I will say that the sectors that actually are aligned with the priorities that the government is setting, and actually this is very good news because it's we are in a position in this country that we have a government that sets priorities and sets the tone for the investments. So these sectors are the energy transition, from coal-fired to gas as transition fuel, and then renewable energy sources as the main power generator. These actually have been evolved in a very good pace, but along that now we have to build energy storage systems. So the government already announced 4.7 gigawatt of batteries to be installed because we have to avoid the curtailments. And in order to have all these systems operating, you need the infrastructure. So you need medium voltage networks, high voltage networks. Also, the priority of the government is to set Greece as an energy hub, which is very accurate in terms of timing, because also of Europeans' focus to reduce dependence from Russia on energy. In order to do that, you need interconnectors. So there are a few interconnecting projects on the energy side. Besides energy, of course, infrastructure is it's always on the forefront. And another area that actually we fall a little bit behind as a country is in water irrigation systems and water investments on water desalination and so on and so forth, both in the mainland but also in the islands. So there are a few projects to come in this area. And of course, traditional sectors, hospitality was and will be in the future, and hospitality in a more diverse way of how we will define hospitality. In the past, it remains a key sector. We never forget shipping. We're a global leader in shipping, and actually the certain period is very beneficial for Greek banks, because under the Trump administration and with the geopolitical tensions with China, the Greek ship owners they're trying to refinance Chinese leasings with European banking financing, primarily with Greek banks, but also some other new emerging areas, both in manufacturing but also in new areas. So we see some development in health sciences and also in the tech business. And I will finish with that. We have a lot of questions. I'm sure Christos and Lazaros have the same. What is after RRF? And I can reassure you, first of all, RRF has a huge tail, because RRF, all the projects are 3-year projects. So we have only 1/3 of the actual contractual loans that have been disbursed. So I wouldn't worry for 26 and 27. But then there are so many plans that I think that can fuel the economy and the credit growth after RRF. I believe that most of the banks, what we're going to provide guidance to our investors for the next 3-year plan, I believe we're going to show some healthy net credit growth in corporate in the area of 7 to 9%. I'm not going to go to notable projects because I think we're running out of time, so I would like my other colleagues to comment.
It is so nice to have so mature and smart people on the table for the moderator. It's really helpful to keep the time. Thank you very much, Kostas. And turning to you, Lazaros, one of the most interesting evolution over the last months in the Greek banking has been undoubtedly the announcement of UniCredit strategic investment, but also partnership, I understand, with the bank. So the question is, how do you see this partnership shaping the regional ambitions of the bank and its product offerings looking ahead?
For the ones who have not followed the story, let me state the facts. Indeed, UniCredit has built a stake of circa 30% in our share capital, an investment of approximately 1.7 billion euro in the bank, which is the largest of its kind in the last 17 years or so. And it speaks about the system and the progress it has made to become more investable and more profitable, and speaks also about Alpha Bank and its strategy as it now connects to the largest European banking network. Beyond the shareholding, there is also a cross-border collaboration agreement, which is quite unique for European standards, as it connects the platforms of the two banks. The principle is very simple. Whenever there is a client that operates in a country where either of the bank has a presence, we try to become complementary in offering services, and we join forces to cover the needs of the clients. We do joint pitches, joint account planning. We refer customers. We have a preferred bank status in the countries we operate, and the two organizations try to appear as one commercial team where relevant. The commercial cooperation extends mainly to corporate wholesale banking, covering areas such as treasury, trade finance, transaction banking, sharing risks, syndicated lending. It also covers wealth management. We distribute investment products in our network of UniCredit, and they distribute products of our asset management business into their European network. We also have a JV in insurance in unit-linked products, but the cooperation goes beyond the commercial aspects. There is a focus on exchanging best practices and know-how. There are dedicated work streams that go beyond commercial matters. And so far, in just a few quarters, we have been able to show good progress with KPIs such as selling mutual funds of UniCredit. We have reached the 1 billion mark in just a few quarters. We have co-led letters of credit guarantees of 0.3 billion, syndicated lending together of 0.5 billion. And also, we have retained a 10% minority stake in UniCredit Romania, which gives us upside in this market. So what is the strategic fit? To start with, there is a shareholder of reference, which always helps to have a shareholder of reference in your registry. Second, we can now boost the business developments in areas that matters, areas that can bring fee business to the bank, which is very important for our financials going forward. Third, we can share risks, especially when approaching name concentrations in certain sectors, thus enabling a more balanced growth in relevant segments. Fourth, it is an area where we can differentiate ourselves since we offer to Greek corporate customers a single point of entry for banking at a European scale with the largest European network in Europe. And last but not least, we aspire to cover a wider geographical area where UniCredit is not present, east and south of Greece, to the benefit of our franchise in Greece.
Thank you, Lazaros. And Christos, I wouldn't help asking a question on technology, right, in today's panel, because it is one of the things that runs with the highest, they say exponential growth rates in today's environment. So the question is, how do you view the role of technology affecting modern banking and more specifically NBG, right, your bank, and any thoughts as well maybe on AI as it's one of the most disruptive emerging technologies that we see today?
Now for us, George, technology is a strategic catalyst and a key lever expanding our product offering capabilities, enhancing productivity and efficiency, and also managing the increasing cybersecurity risks that we face as banking institutions. And of course, always with a view to improve the customer journey. We at MBG have been spending heavily on technology, as we were discussing with Kostas the other day, over $1 billion in the last 5 years, and we've managed to elevate our digital capabilities through our transformation. We believe that it's going to be a key comparative advantage in the future, but it will also help us manage potential competitive pressures from tech companies, the likes of Revolut, and we need to protect the younger segments of our customer base. We developed several new functionalities. I can mention a few. For example, now we have our CRM system in a tablet, so we can bring the branch to the customer. We apply OCR technology for document and invoice management. We managed to upgrade, if not all, nearly all our IT peripheral systems. But what I would like to say is that what we've been doing in MBG, I think the most transformative initiative we took was the upgrade of our core banking system. It's a significant milestone. We started back in 2020, and we're about to finish in the first couple of months of 2026. We have a next generation core banking system. It's fully cloud-based, scalable, and fundamentally it enhances our operations, productivity, and simplifying our overall IT infrastructure, and enabling faster and more effective responses to our client in this digital era. Now, you mentioned also AI. I would say that AI is an additional catalyst to all the above, and it's offering huge opportunities going forward to improve even further the productivity as well as the efficiency. In MBG, we try to incorporate AI into our transformation program, and we established a new unit through which we expect to identify and develop use cases that are applicable to us. I have a few examples. We are integrating Gen AI in our IT workflows to enhance specifications, coding, and testing for faster delivery. We've introduced Athena. It's a bank-wide chatbot through which employees can faster learn about processes, procedures, and be onboarded more easily. We rolled out a secure GPT platform for content creation. And for our customers, we have recently launched Sophia. This is an AI-powered agent, a digital assistant. That's on our website and soon, I hope, in our internet and mobile banking, which offers 24/7 support. Now, it's good to talk about technology, but I think we should not underestimate human capital and the fact that, without people, the machines cannot deliver. So we are continuing also to invest in our people, developing them, and also trying to onboard new skills and talent so as to keep up the pace in what's our primary goal, the quality delivery of products and services to our customers.
Thank you, Christos.
George, can I say something?
Sure.
We have a discussion with, as Christos said recently, is technology today is extremely important for one more reason, since we're an investment conference. Capital inflows, actually what they really evaluate today is resilience. And resilience has to do with technology as well. So banks today, it's not only about loan growth, which is my heart, as you know, but it's technology. So whoever is not going to invest in technology, so we will keep investing in technology, then it doesn't have any future in banking.
Thank you, Costa, which is also in our heart as consultants. And Valerie, closing with you, as we started with you, and Christos discussed about the technology transformation journey, if you will, of the bank. And I understand you have as well a technology and overall transformation journey ahead of you, following the merge of Pancreta with Attica Bank, while at the same time you have announced the recent expansion in Malta with the acquisition of HSBC in Malta. So how do you see these two coming together, expansion with transformation journey in Greece?
Excellent question. We've been the quickest turnaround story and cleanup story in Greece, combining the banks together. So the acquisition now of HSBC Malta is fully aligned with CrediaBank's growth strategy and long-term plan. It's going to act as an accelerator for us based on our implementation of the new business plan. We've already changed our name, our identity. We continue on this path. We've already done an operational merge, which was Pancreta with Attica, today's name CrediaBank. We've changed our name, as you've seen, to a fresher look and feel. Our presence has changed, and we are now moving beyond the borders. We have a management team that has proven track record, successfully executing and effectively integrating all the banking operations which had taken place. This we demonstrated with the integration of HSBC within Greece and Pancreta, so we've proven execution credibility. Specifically regarding Malta, HSBC Malta, our experience is based from integrating HSBC Greece's operations, as well as the solid understanding of Malta's data, and this thanks to previous experience for many of us on the management team, as well as much of our staff. So there's understanding on the structures, the philosophy, the processes, the products, everything there, which gives us the confidence. This was also our strategic advantage in competing for the bank against others, as we mentioned. At the same time, though, we continue undergoing internal administrative adjustments so that the integration of HSBC Malta does not become an unnecessary distraction for us. We need to continue our further growth and strengthening of our presence in Greece. We have sustainable growth, financial indicators. We continue on that path. We had excellent performance up until the 9 months 2025. Our business plan in Greece is quite ambitious. It's aiming for annual credit expansion exceeding 1 billion and growth across all of our operations. So this must not be put at risk. It will be reinforced through the Malta acquisition and the synergies which we will emerge from the acquisition.
So Valerie, Lazaros, Konstantinos, and Christos, thank you very much for our discussion today. And ladies and gentlemen, all of you for your attention. Thank you very much.
Thank you.